Welcome back to today's More Report Chart Appraisal videos on Friday the 19th of August with me, Rich, Pro-Market Analyst at Handset Markets. We're going to look at sterling dollar now, and we had a sort of a second really strong candle yesterday for sterling on the back of the better than expected retail sales data for the UK, and that sort of has started to generate far more of a positive or an improving outlook, I should say, on a near-term basis. And the move above 30.06 or 30.60 is a big move, I think, near-term. And I think ultimately that sort of reopens the upside, because that was a key old floor, became resistance, and then we're just burst straight through that. So it is a key move that we're seeing, and what we are now at the point of is that sterling is at a little bit of crossroads, really. I think it needs to continue this RSI improvement above 50. If it can push the RSI above 50, then I think that would be suggestive that the bulls are going to be able to hold on to this move. The stochastics have certainly improved, and the MACD lines have turned up, and you'd say theoretically this is a downtrend move in the past sort of almost 2 months. But that downtrend comes in around about sort of 33 big figure area, which again is not a million miles off that 23.6% fib level. So there is room for further upside from these levels here, where we see it at the moment, just above 31 figure, but needs to hold on to this move. And not only that, I think it needs to break above 31.75. 31.75 was this sort of reaction high that we saw in the 5th, but of August, but it was actually a bit of a pivot line as well. Now it's sort of been stuttering around that since that bullish move on the retail sales data yesterday. It's been sort of flying around that, yet sort of mildly broke through at 31.84, but again sort of came back inside it. Now you're looking at this uptrend move, and you'd argue, when is an uptrend sort of broken? Or, I mean, I've sort of taken it as sort of a little bit of artistic license on this one, because you had that spike lower on the Fed minutes, so I've taken it as a little bit of artistic license, and it could be that we're starting to break that uptrend, because you look at this hourly RSI and it's starting to break below 50. Now if that continues to go to the downside, I think that initially we need to see that the support, you've got a support of the old resistance turns new support. So old resistance was around 31 figure, broke through that yesterday decisively, so that turned supportive. So that between that and 30.60, which again is an old floor, so I think you've got 40 pips worth of sort of pretty important support now near term. 30.60 to 31 figure, if you see that those two levels or that range broken, I think that you're going to see that the bulls have lost control, and you're going to see the selling pressure coming back in. But if you can hold above that level, then I think that the bulls are going to stay in control and continue to sort of help this recovery, because the dollar certainly seems at the moment, although yes, it has had a bit of a sort of a recovery move today, I think it looks increasingly corrective. And it could well be that in front of the Jackson Hole speech from Yellen next Friday, I think that could continue. So it's got a little bit of dollar strength, which is pull cable lower, but it's not yet sort of broken this little recovery move that we've seen in the last few days. And it could well be that this continues up towards sort of 33 big figure area if the bulls can sort of hold on to the gains and maintain the momentum. But obviously now it's a little bit corrective. It's sort of 50 ticks down on the day, but if it can support that and move higher, I think that there is further legs in this recovery. So I wish you good luck in your trading today, and I will speak to you later. Thank you.